I'd like to wish everyone a very warm welcome to the Global Government Tax Summit. My name is Kevin Sorkin and I'm the founder and director of the Global Government Forum. Our aim is to provide environments for the sharing of government information and best practice to help senior government officials address the real challenges they face and support them in finding solutions to these challenges. This year, the Global Government Tax Summit will focus on tax and government revenue trends and ways to reduce the shadow economy. So thank you all for joining us for this very important webinar. I would also like to thank knowledge partner MasterCard for their effort and input into the summit and EY for their valuable insight today. You can send questions to us throughout the presentation by typing them in the facility provided on your webinar screen. We will then address these questions in the Q&A session at the end. Now, to open proceedings, please can I welcome Michael from MasterCard.
Good. I think that we have a global audience, so good morning, good afternoon, or good evening to everyone on the call. I wanted also to welcome you very warmly on the webinar where we want to share with you how electronic payments can support governmental activities in limiting or reduction of the negative effects of the shadow economy. And as just a couple of sentences of introduction before I hand over to Marek, that will be more in the details of the work that we've done. I just wanted to share with you that as MasterCard, we see cooperation with governments as one of the most important priorities on a global level that we follow. We see that there are several areas in governmental space or public space where electronic payment can bring the difference in terms of the efficiency or transparency of the financial flows. One of those areas that we have identified roughly 2 to 3 years ago in Central Eastern Europe is the common challenge of governments to fight against or reduce the negative impacts of the shadow economy. And at that moment of time, we've decided that we want to support the governments in Central Eastern Europe in those efforts. So we have decided to provide a deep dive analysis of the shadow economy area with some very practical solutions, how electronic payments could support the transparent economy. So we've done the study on 8 markets where the study was run by EY. In that study, we have introduced some innovative and new elements that were very warmly welcomed later on by the government as a new findings and more adequate, more precise identification of the shadow economy. And I'm here especially talking about dismantling the overall shadow economy effect into more precise and detailed passive and active shadow economy. Then introducing the sectoral breakdown that Marek will go to later on, and also providing some P&L estimations on what could be the impact on the governmental tax revenues if some of the ideas that we have proposed would be implemented. And right now we are 2 years after the launch of the process. We've already finalized the study. We've already discussed the studies across markets in Central Eastern Europe, and we can say that we already have some positive impacts and positive reactions and implementations of some of the tools in the markets across Central Eastern Europe. So we found that this as a good moment to share all the knowledge that we have to you and see how that could influence or support also your work in other markets in that area. So right now I would like to pass the floor to Marek that will walk you through the more detailed approach on what we did and how we did in the shadow economy study. Thank you very much.
Thank you, Michał. So I will now have a pleasure to give presentation that largely draws on the research that we have conducted for the last 2 years for MasterCard in different markets. But before I go to our research findings, I would start with first with overview of public finance situation in the world economy, in particular how it deteriorated as a result of the crisis. Then I will discuss how shadow economy contributes to public finance imbalances, and I also discuss the level of the size of the shadow economy estimated in some countries, and in particular we'll also discuss the role of cash payments in generating the shadow economy. And then most importantly, I will discuss how electronic payments, by crowding out cash transactions, can help in reducing the shadow economy. I will discuss specific measures, including the estimates of their effectiveness, and also how they are put into practice by different governments in various countries, not least the countries that the MasterCard focused on in recent years. So starting with public finance situation, as you may see on this slide, we present the findings based on 183 countries for which IMF published data. And you may notice that in the period of 2008 to 2016, in the 3 quarters of those countries, public debt has increased. And actually, in majority of the countries, it has increased by more than 15%. And if you may notice that there are some countries on this graph put in the blue frame. And those are the countries that we focused on in our research. And what you may find is that in every of those countries, public debt has increased over the analyzed period. And on the right-hand side, you may also notice that public debt in the world economy over that period increased from 64.7 to 83.5% of GDP, which actually indicates a growth of almost 30%. So that's a huge increase in public finance imbalances. And despite the public debt being elevated, what we can still notice on the next slide, it is illustrated, is that in 85% of countries in the world, governments still run deficits. And actually, in majority of them, the deficits exceed 3% of GDP. So which is yet additional factor contributing to public finance imbalances. And with high deficits, it is impossible to tackle the public debt problem efficiently. One of the sources that contributes to government deficits are tax gaps. Tax gaps that we can define as the difference between the tax revenues actually collected and tax revenues that should theoretically be collected, provided that there are no gaps in their collection. While this is a pretty difficult concept to measure, relatively easier to measure is the VAT gap that constitutes part of the total tax gap. And as you may see on this graph, VAT gap in the European Union amounts on average to 14%. That means that 14% of VAT liabilities are on average not collected. However, in a number of countries that we also analyze, this VAT gap exceeds the EU average, and it is particularly high in Poland and Slovakia, in the latter case reaching as much as 30% of total VAT liabilities. So now the question is, how this tax gap can be addressed and how public imbalances can also be addressed. So we should look at the sources of tax gap. And there are 4 pillars outlined here. I will not discuss each of them in detail. I would like just to emphasize, first of all, the very first pillar, which is shadow economy. Shadow economy defined as unreported transactions. So transactions that are not registered, are not visible, there are no receipts, there are no invoices. That would actually indicate that the transaction actually took place. On the contrary, if you look at the second pillar, which stands for tax frauds, and very often connected with criminal activities, this is also an important source of tax gap. However, it is often confused that tax frauds also are a part of a shadow economy. However, when it comes to different estimates provided by international institutions or statistical offices, tax frauds do not constitute a shadow economy. Why is it so? Because they usually draw on invoices or receipts that are issued, but therefore those transactions are reported. It is not that they are not visible. The issue is that they are abused and they are used for tax benefits for criminal, groups very often. So this is the difference I would like to emphasize, that shadow economy does not include tax frauds, because what we focus on are transactions that are not visible, that for which there are no invoices nor fiscal receipts issued. So now the question is, how actually this shadow economy looks like, how big is it, and in particular, what is the role of cash payments in this process? So I will here draw on the study that Michał already mentioned, that published study on reducing the shadow economy through electronic payments, which is also accompanied by individual country reports. So we also published 8 country reports that looked into in more detail into a given country specifics. On top of that, we also published 7 technical appendices because we very much emphasize the transparency of our approach, and including the methodology. Because the issue is that if you look at different shadow economy studies, there is often little information on how actually those results were calculated and what models were applied. So we very much emphasize transparency of our approach. And again, one more illustration, just not to avoid confusion of what we actually measure. So again, I will not discuss in detail this slide that you may notice, but if you look at the area within the red frame, this is actually what we measure. And this area stands for transactions that are not reported. So on the left-hand side, you may see transactions conducted by entities that are unregistered. So formally, they do not exist as companies. So by definition, all the transactions are not reported because they are also not registered. So it is clear that they are part of a shadow economy. However, what we are more interested in our study are transactions conducted by registered entities, so formal existing companies. However, some of them do not report a given share of the transactions. So what we also see are the transactions conducted by registered entities, but that remain not reported. So there are no invoices or fiscal receipts issued. And in this case, what we particularly emphasize are the 2 components of that shadow economy. Michał already mentioned the passive component and the committed component of the shadow economy. And this difference is very important, so I would like to emphasize it because this will also allow us to understand better measures that I will discuss in a couple of minutes. So the difference is related to the role of cash payments, because in the passive shadow economy, cash is the very source, it is a cause of shadow economy. While in the committed shadow economy, the cash is just the consequence of shadow economy practices. So let me give you an example, because the example will best illustrate the difference. So let's start with the committed shadow economy. And the example is provided on the left-hand side of this slide. So the committed shadow economy occurs where there are 2 beneficiaries of shadow economy transactions, namely the seller and the buyer. So an example being, for example, construction service that is provided to the client at the discounted price, lower price, however, based on the condition that invoice will not be issued. So the buyer here, for example, an owner of the apartment, benefits from a lower price. But in exchange, he or she does not demand an invoice. At the same time, the seller or the service provider here benefits from not reporting these transactions and from not paying taxes. And here, in order to hide these transactions, not to report it, both parties, both sides of a transaction agree on using the cash, So here, in this case, even if you promote electronic payments, that measure will not be very efficient, maybe only partly. The reason is that both sides of a transaction are committed to use cash in order to hide the transaction. So they are aware of it, they do it on purpose. They are active participants in the shadow economy. So here cash is just the consequence of shadow economy practices. However, we have a different situation in the case of a passive component of a shadow economy. And another example is provided on the right-hand side of this graph. There, in the passive shadow economy, there is one beneficiary, that is the seller, while the buyer does not benefit from the transaction being in the shadow economy. So an example, maybe the most straightforward example, is that imagine you go to a restaurant, you have a good meal, and when it comes to payment, you settle that in cash. But you may not demand a receipt. So if you pay in cash and you do not demand fiscal receipt, you provide the seller with an opportunity not to report the transaction and not to pay taxes. So in this case, you as a customer, you should be, in general, there are some exceptions, but in general, you should be indifferent whether to use cash or electronic payment, because the price would generally be the same. However, for the seller, the difference may be important if the seller wants to hide the transaction. So if a payment is made in cash, the seller may not to report the transaction, and in this way, transaction would be in the passive shadow economy. What we may notice here is that the means of payments play a critical role, because if that payment made by customer was made in an electronic manner, then the ability not to report the transaction would be much smaller. And in fact, the transaction would be registered, it could be tracked down. So in this way, the shadow economy could be addressed efficiently. So here, what we observe, promotion of electronic payments and replacing cash payments with electronic means would be a successful way to deal with the passive shadow economy. So here, in this passive component of the shadow economy, what you may observe it is that it is cash payment that is the very source of the shadow economy. And customers may not be even aware that they contribute to shadow economy. So they are passive participants of the shadow economy. They do not benefit from it. They may not be even aware that they contribute to shadow economy expansion, or they simply tolerate such practices. So this is what we focus on, this passive component, because this is the way, this is the area of the shadow economy that you can tackle with the promotion of electronic payments. So when it comes to the estimation of the shadow economy, including this passive component, we presented it on page 12, so the current slide you got in front of you. So again, the methodology is explained in detail in the technical appendices that are publicly available and that I already provided a link to. So what you may observe here are the results of our estimations for a group of 8 countries, and you may notice that shadow economy in total was estimated in the range of 11.3 to 25.2% of GDP. Importantly, what you may notice are those yellow or orange bars that stand for the passive component of the shadow economy. And interestingly, in all of the countries, it is the passive component that accounts for majority of the total shadow economy. So it starts with 60% up to almost 91% in the case of the Czech Republic. So it indicates actually that potential for reducing shadow economy through promotion of electronic payments seems to be enormous. And then another question that we also deal with is the sectorial structure of a passive component. So you may see it on page 13. And those bars stand for different sectors and their contribution to the passive shadow economy. And there are 2 components, 2 factors that affect the role of a given sector in generating the passive shadow economy. One is the size of the sector itself, which explains actually why the contribution of food, beverages, and tobacco is the largest, because the share of this sector relative to other sectors is higher. Therefore, its also contribution to the shadow economy is higher because of the very size of this sector. Another component that affects those figures is frequency of cash payments. So the more frequent cash payments are in a given sector, the higher its contribution to the passive shadow economy existence. Just maybe one comment, because sometimes people are surprised that they do not see construction sector here. And we know in many countries, actually, construction sector is contaminated with shadow economy practices. However, construction sector is mostly subject to committed shadow economy that I just mentioned, because there are two sides of the transactions that benefit from not reporting the transaction. But here what we focus on is this passive component of the shadow economy, so this part of the shadow economy that can be dealt with the use of electronic payments that replace cash payments. And then a very important question is, what are the existence of this passive shadow economy mean for government in terms of government losses, which also brings us back to this public finance context that I started my presentation with. And here, what we present are government losses broken down to VAT and corporate income tax revenues in different countries due to the existence of a passive shadow economy. So it also illustrates potential for improvement in government revenues, provided that passive shadow economy is addressed efficiently. And we see that those numbers range from 1.6% of GDP of government revenues for Slovenia to as much as 4.2% of GDP for Bosnia and Herzegovina. At the same time, what we emphasize, especially when it comes to corporate income tax revenues, is that in our research, we, in every situation subject to uncertainty, we try to opt for a conservative approach, which means that those government losses may in fact be even higher than those presented on this graph. Again, the methodology and our approach is described in the report prepared for Mastercard. So then a natural question that arises is how this passive component can be dealt with, and what measures can be applied, and how effective they may be, and what they mean for benefits, but also costs that may have to be incurred by the government to introduce them. So the mechanism that we consider in our approach is as follows, and as illustrated on this slide. So we consider different measures that, first of all, may lead to promotion of electronic payments that at the same time replace consumer cash payments. If this is the case, so if consumers pay more often electronically than in cash, as an example in the restaurant has shown, that would limit ability of the seller not to report the transaction, and in this way, that should decrease the size of the passive shadow economy. So in this way, government revenues would also increase because the tax base would expand. At the same time, another mechanism that we also consider is the increased share of consumer cash payments. So it is not always electronic transactions that have to be applied to deal with the passive shadow economy. We also recognize that there are different approaches that consist in increasing the share of registered consumer cash payments. So that actually also would help to decrease the size of the passive shadow economy and increase government revenues. At the same time, what we observe is that some regulations or some measures also entail costs that have to be incurred either by merchants, consumers, or the government. So this is also something that we also have to account for, and we just indicated in the upper part of the graph. So then what we do, we set those costs against benefits to arrive at the net impact on government balance. So this is the approach, general approach that we adopt to deal with the estimation of the effectiveness of different measures. And actually, there is a wide range of potential measures that may be introduced to reduce the passive shadow economy. And on this slide, we listed down a number of those measures. Some of them are related to obligations, others to incentives. And what you may also note is that for each regulation, we also put in the bracket an example of countries where such regulations exist. So these are not just theoretical examples, but in fact, the examples of regulations that are put into practice by an increasing number of countries. So one measure being obligation to operate POS terminals, an example being South Korea. Another is related to obligation to make electronic payment of either social security benefits, but also wages and salaries. Very popular thresholds for B2B cash payments, but there is also an increasing popularity of thresholds imposed on consumer to businesses cash payments. A very popular measure and also catching public attentions are receipt lotteries, often combined with card lotteries, also an increasing number of countries using that, and Taiwan actually being a country where it has been used for decades. There is another obligation to operate cash registers that are often connected online, and this is also particularly popular in the Central and Southeastern Europe. A very interesting measure that I will also provide an example for are tax incentives for consumers to make electronic payments, but there are also tax incentives for merchants, although much less popular, but still there are examples of South Korea and Uruguay. And last but not least, this is something that we did not analyze in detail in our report, but it is worth to mention also e-government initiatives and significant development of e-government services, both to consumers and businesses, that can also contribute to the contraction of the shadow economy, however, indirectly. I mean, we can discuss it afterwards. Again, that was not part of the report, but it is worth to mention it. I'll just provide 3 examples of regulations and what is the result of their impact on shadow economic contraction and government revenues. More regulations and other approaches are described in the report. Here, again, I will provide just 3 examples. I will start with obligation to make an electronic payment of pensions. Again, what I would like to emphasize, this is one of the least powerful regulations that we present in the report, but again, this is something that is worth to focus on, because again, a number of countries increasingly recognize the need of its implementation. So here, what we do is we imagine the situation that pensions have to be transferred via the banking systems or electronically. It means that many pensioners that currently receive their benefits in cash would have to actually to have a bank account or obtain their benefits in an electronic way, in different ways. It does not mean that we assume that all pensioners now will spend all their pension benefits electronically. No. Well, obviously, we do account for the fact that they will still continue to withdraw a large share of it in cash. So they would continue spending in cash very often. However, a part of their benefits would be spent electronically. Again, what share it is described in the report. And then what we observe is that if an increased share of spending of pensioners is made in an electronic way, it means that cash is crowded out, and then passive shadow economy should also be reduced. And on the left-hand side, we see how big this effect in terms of shadow economic contraction should be. And we see that the impact varies from 0.16% of GDP for Bulgaria to almost 0.6% of GDP of shadow economic contraction in Poland. On the right-hand side, we present the impact of this regulation on government revenues with the highest effect for the Czech Republic. So we present those figures both in terms of GDP, but also in million euros. Another regulation that we present on page 19 is the obligation to operate POS terminals. Again, a regulation that is already being implemented in some countries and increasingly recognized and being discussed in other countries. And so if there are more POS terminals, that means that the acceptance network infrastructure should increase the popularity of electronic payments. If this is the case, it again means crowding out some part of cash payments, which in turn leads to construction of a shadow economy. Here we assume, because this regulation may be implemented and tailored to given sectors, for example, so just specific sectors may be subject to this regulation, and this is what we also consider in our report, where we distinguish individual sectors and the impact of this regulation for a given sector in a given country. But here we assume that this is applied generally, and what we may observe is that its impact on shadow economic contraction is by far the highest in the Czech Republic, reducing the shadow economy by more than 1.1% of GDP, and the lowest impact being for Bulgaria and Croatia. And on the right-hand side, again, we present in an analogous way to the previous slide the impact of a given regulation, this regulation in particular on government revenues. Here we assume that it is the government to finance terminals. However, different approaches may also be adopted, and again, both approaches are presented in the report prepared for MasterCard. Last but not least, I present the impact of a regulation that focuses on tax incentives for consumers. Because what we recognize is that while in many countries the lack of infrastructure is a big issue, in other countries the issue is also related to consumers' attitude. And one of the answers to address this issue is to provide tax incentives for consumers that may be introduced in very different ways. And one example being very popular regulation that has been enforced since, as far as I remember, 1999 in South Korea, that introduces income tax deduction mechanism for households that made electronic payments. Such a regulation in a somewhat different form has recently been introduced also in Bulgaria, or another one in Greece. So below what we present is a very simple example, very straightforward example. So as I mentioned, in practice, that regulation is introduced in different ways in different countries to allow also the government to control the potential costs of these regulations that have to be incurred. But here what we assume is a cashback mechanism. So in other words, if you as a consumer, if you pay electronically, the price is lower. As simple as that. So this is the mechanism. The price is lower if you pay electronically. And obviously it means that someone has to finance this discount. Here, for simplicity, we assume it is the government, be it through VAT or other mechanisms. And at the same time, what we observe is that such incentive should greatly increase the popularity of electronic payments, because it would stimulate and provide a strong incentive to consumers to shift from cash to electronic payments. And what we observe is that this optimum relief or discount or cashback varies with different countries, because it depends on many country-specific characteristics. Still, what we observe is the very powerful impact of this regulation, because a change in government revenues can be quite significant. In gross terms, being close to 1.5% of GDP for the Czech Republic. However, we have to account for those costs I just mentioned, but even doing that leads us to the impact in net terms that is still positive and sometimes significantly positive. And this is illustrated by these blue bars that you can see on the slide. So this illustrates the net impact of this regulation on government revenues that is related to shadow economic contraction due to significant shift of consumers from cash to electronic payments. And in the presentation that you will also receive after the webinar, you will also pay more attention to other regulations that are listed here, and those bars, these two different colors, stand for the lowest and the highest impact of a given regulation in a given country. So, for example, those tax incentives for consumers, as you may notice, their impact on shadow economy contraction stems from 2.2% to as much as 6.7% of GDP. So depending on the country, the impact of this regulation may be different. And we also have a similar slide that illustrates the impact of different regulations in terms of government revenues, net increase. Again, I emphasize the net aspect because we also account for the fact that some regulations also entail the costs that may have to be incurred by the government. So again, those regulations and those graphs illustrate the impact also of other regulations, all of which are described in the report prepared for MasterCard. And last but not least, what we would like to emphasize is that it is not just theoretical exercise. We estimate the actual impact of a given regulation in some countries, and it is worth to mention that many of such regulations are already in force in many countries or are being implemented or are being discussed worldwide, but also in the countries that we focus on in our analysis. Here you got a list of 8 countries that were subject to our report, but also worth to mention, for example, Romania or Hungary, where MasterCard is also active in terms of their research and activities, and an example of Romania being unique solutions for e-government and common place for payments for local and central taxes, and also the case of Hungary, where now discussion on also POS terminalization is underway. So, but here again, we focus on the 8 countries that were subject to our report, and you may actually observe here that every regulation considered is implemented, is enforced at least one of those countries. But there are other regulations that are very popular in other countries, not to mention B2B thresholds that are actually present in every country. And just to provide an example, because at the end of the presentation that you will get, there are some additional slides with examples of regulations of measures implemented in individual countries, where you will find additional information on those instruments. But here, just let me mention a few examples going regulation one by one. So starting with tax incentives to make electronic payments, and one example being in Bulgaria, where a new regulation implemented this year was that taxpayers who make electronic payments can receive up to 1% of relief from due income tax. Obviously, there are some restrictions, and also the cap on this amount being equal to 500 Bulgarian leva. Another examples are those B2B cash payments that I just mentioned, and one observation worth to emphasize is that you may notice that those thresholds are present in every country. And I would even say that it is not only thresholds, because in some countries, including Bosnia, actually those thresholds are at the level of 0, which means that it's a general obligation for businesses to make payments electronically. However, there are some exceptions, so it is not prevailing, it does not influence all the transactions, but as a general rule, it means that businesses are supposed to conduct their transactions electronically. In many other countries, thresholds are pretty low, but in Poland, where that threshold was high, you may notice that it was recently reduced from 15,000 euro, which was equal to roughly 65,000 zloty, down to 15,000 zloty. So it is less than a quarter of the previous limit. And still, in many, many countries, what is being considered is further reduction of those thresholds. Apart from B2B thresholds, in an increasing number of countries, thresholds for consumer to businesses and businesses to consumer cash payments are also being introduced, and they are more and more popular. One example being in Slovakia, where the threshold of 15,000 euro for entrepreneurs and non-businesses persons, for non-businesses or natural persons exists. And there is, again, also a current discussion on further reduction of those thresholds, similarly to B2B thresholds in other countries. Next, another regulation that is also getting more and more popular is obligation to make an electronic payment of wages and salaries. For example, in Croatia, those payments that are deemed as income should be made to recipient's bank account. Again, there is also interesting discussion in Poland, and this regulation is also in existence in Slovenia and Bosnia. Another regulation similar to the one for which I provided an example is related to electronic payments of pensions and also social benefits. And one example being Bulgaria, where social benefits recipients are obliged to open a bank account if they didn't have one, because those benefits are paid electronically. Yet another regulation is related to payment, or solutions are related to payment of taxes, fines, other government fees, and these e-government solutions are also expanding in different countries, or there are plans for the further expansion in other countries. And in Slovakia, for example, taxes can be paid through bank transfers, postal order, or electronic stamps purchased in kiosks. And there are further additional plans to enable electronic payments via e-government portal. Very popular and very catching public attention are solutions in the form of receipt lotteries. So if you collect receipts, or it can be also POS slips, you are actually entitled to take part in the receipt lottery, and you have a chance to win prizes, like a car or money. Again, two examples that I provide here is one in Serbia, where the first cycle of this lottery turned out to be a great success, because as many as 8 million envelopes with receipts or POS slips were sent. And another lottery is planned to take place in autumn. In Slovenia, to participate in the lottery, you as a consumer have to collect 10 different fiscal receipts issued by different goods or service providers. That means that it is not only one point of sale that you can collect receipts from, but you have to do it in a broader manner. Again, you can target specific sectors. For example, in Poland, receipt lottery, there is a higher price for those who provided the receipts in a given sector. And you can do it, for example, for a sector where you expect that shadow economy practices are more prevalent. Another solution is related to electronic evidence of revenues, like cash registers connected online, and one example being in Czechia, and in specified sectors, entrepreneurs are obliged to use electronic cash registers with online connection. And importantly, an expansion of this obligation is underway. Finally, the obligation to operate POS terminals, that's also a regulation for which I provided the estimates and that are also discussed in our report. And interestingly, this regulation may also be considered to be introduced in selected sectors. And this is actually what is going on in Serbia, where the obligation to operate POS terminals for businesses is applied to certain sectors. However, the issue is that there are no sanctions for non-compliance, so I have to mention it here, because we also have to remember that for regulation to be efficient, sometimes sanctions are inevitable. Also, it's good to remember an example maybe of Italy, where there was obligation to have POS terminals, but having POS terminals doesn't mean that they are able to operate, that they are active, because you can have POS terminal but pretend it doesn't function. So, there are these small details, but that may matter a lot in terms of a given regulation efficiency. Okay, so let me summarize as for conclusions. First of all, what we discussed is an increase in public finance imbalances that has occurred in the post-crisis period. And those fiscal imbalances do reinforce the need to reduce the tax gap through the contraction of the shadow economy, since shadow economy is a very important source of tax gap and, or in this way, an important source of fiscal imbalances. According to EY estimates, the majority of the shadow economy is related to the passive component. And this passive component has been estimated in the group of 8 countries in the range of 9.2 to as much as 21% of GDP. And this indicates a huge potential for shadow economy construction through promotion of electronic payments, because this passive component of the shadow economy, this is the part of the shadow economy for which the source are cash payments. So crowding out cash payments is a solution to deal with this part of the shadow economy. And potential government revenues from eliminating this part of the shadow economy have been estimated to range from 1.6% to 4.2% of GDP in the group of 8 analyzed countries. And we showed that there is a wide range of different measures that comprise both obligations and incentives that may be considered to address the problem of the passive shadow economy. And what we have shown, those measures are already enforced in many countries. In other countries, they are being implemented or are being considered very often. Of those measures, the most efficient one, at least in our report, was financial incentives for consumers who make electronic payments, because they turn out to be able to reduce the passive shadow economy by 2.2 to 6.7% of GDP, at the same time increasing government revenues in net terms by up to 0.6% of GDP. And again, what I would like to emphasize that we observe an increasing number of countries introducing new solutions promoting cashless payments. However, those solutions are country-specific, and different variants of those measures may be considered. They have to be tailored to the specifics of a given country, and in particular, many of those can allow the government, for example, to control the cost more efficiently, to avoid the risk that a given measure may entail too high cost or higher costs than initially expected. And so that would be it at this stage. So thank you very much for your attention. As I mentioned, the presentation will be forwarded to you, so we will deliver it after the webinar. At the same time, after the presentation, there are some additional slides that provide more details on measures implemented in individual countries. Thank you.
Thank you very much, Marek. Is there anyone from MasterCard that would like to add anything at this point? And whilst that's happening, are there any questions from participants? If so, could you send them to us on the chat system? You should have received the message already from.
Well, it's Michał Skowronek. Maybe I will add just a couple of sentences on a very practical implementation of what was done in Romania, where we've been working with the Romanian government for last 1.5 years on the shadow economy, and the result of that work is that Romanian government made the decision to introduce fiscalization and terminalization law that results in first of all tightening the fiscal policy and obligation of the reporting and to fiscal authorities revenues and of the companies that previously were, let's say, on the soft side of the reporting. And in the same law, Romanian government says that each and every merchant that is above $10,000 annual turnover is obliged to have and use the POS terminals to accept simply the electronic payments. The law was announced roughly September, October last year, with the entering into force from January 1st. Though there are no still the execution norms produced and delivered to the market, which is kind of a second step after the approval of the legislation in Romania. This regulation, this initiative has tremendous impact on how merchants react and how acquirers react to it. And what we observe is, I would call it a geometrical growth in terms of the number of new merchant locations that accept the cards, and that has also the impact, a little bit slowed down, but that's kind of normal in the business, of growing volumes, and in the same time growth of the tax collection for the governmental officials. So this is the most practical and the very impactful initiative that was introduced based on the cooperation that we had with the government on the shadow economy. A very similar initiative with the whole package of the initiatives is being right now prepared in Poland. So you might expect also to see hopefully in a couple of weeks or months a pack of the initiatives taken by the Polish government. So if you have any questions to what was presented, we are happy to answer it.
I think we do have a question from the Italian Revenue Agency, I think. Just waiting for this to come through. It's a message, actually. We have another question. Is there a role for behavioural insights in reducing the shadow economy? It's becoming a much more seriously taken practice now across governments around the world. Do you have experience of behavioral insights being able to play a role in reducing the shadow economy?
Kevin, can you please make it more clear? What do you mean by behavioral insights?
We, in the UK and in many countries in the G20 really, are using behavioural science to nudge people towards changing their behaviours, citizens towards changing their behaviours. This, for example, perhaps is moving from cashless societies to electronic payments, and what methods can be employed to nudge the citizens, perhaps to partake in this behaviour more, but also in other methods as well, such as ways in which people actually respond to returning their tax information to government, such as businesses and personal.
Yeah, maybe this is Marek speaking. Those are very country-specific issues, and not only related to the income. For one example being Germany, where cash is quite prevalent, or even Japan. On the other hand, other high-income countries like Scandinavian countries, where cash usage is very low. But apart from that, indeed, there are some cultural or behavioral attitudes that do impact the cash usage by consumer or businesses. And again, depending on the country, you may find different factors influencing that. The level of education is one. Again, level of income is another one that also is related to higher popularity of electronic payments among those people. But their attitude is also important, and also not only attitude towards the usage of cash, but also, I would say, the tolerance for shadow economy practices and for not reporting the income. And this is what you can observe this is approximated by indices such as rule of law or tax morale. And again, that is related to people's attitude. And what you may observe is that in the countries where this tax morale is low, or this rule of law index that is published by the World Bank is low, you may observe that the cash usage is also quite high, not only, as a statistical correlation, but in econometric models, you also find these relations, which is pretty robust, which indicates that people have either accept or also participate in the shadow economy, and they are aware that to be able to do that, they use cash. Another aspect is obviously related to education and inclining people to use electronic payments more often. And what we observe is, again, that in countries with less financial inclusion, when there is less expertise, people often are not aware of benefits of electronic payments, and they think the cash is more safe, and also cash even allows them to spend more efficiently and faster money, which is actually not the case. So what you observe is that this education and increasing awareness of people does play a very important role. However, it is very much related also to trust to public authorities and financial institutions, which again varies with countries.
Thank you.
I see there are questions, right?
Yeah, we certainly do. Have EY or MasterCard performed similar analysis of other countries, e.g. UK or other parts of the EU, Scandinavia or APAC?
Well, so maybe I will answer that question. We have a project, or we have in mind how we can expand and export this work to the other markets. We are right now in the process of selecting which markets would be the most beneficiaries of applying this approach. And the plan is that this year we would continue to work on performing this study in other markets. Now, the list of the markets is not yet set. We will be ready with that in a couple of weeks.
Okay.
If I may also intervene, this is Andrea Dobra, Head of Public Policy for MasterCard for Romania, Hungary, Croatia, and Slovenia. Answering to this question, I would follow up with saying that we have performed similar analysis for Romania in starting 2014, analyzing the shadow economy with another provider, but we are happy to share that particular study with whomever is interested. And we are, of course, part of this analysis to replicate the work done by EY and perhaps extend the initial exercise performed in 2014 to refresh the measures that have been implemented or on the way of being implemented in Romania as a result of that study. So thank you.
Thank you. We have another question. Is in any of the countries analysed in the incentive to merchants be implemented? If yes, how was it implemented? How was the impact?
Okay, so these actually solutions for merchants, Marek speaking, is not very popular. And if it's implemented in other countries, it is mostly implemented temporarily. One example being South Korea. And also now there is support in Serbia provided. But when it comes to Korea, incentive was in terms of some, as far as I remember, tax liabilities deductions. So in fact, some cost was refunded to merchants, but it was introduced temporarily because in general that promoted infrastructure development. When government provides incentives to merchants, that may increase their openness to buy or settle POS terminal at their POS. However, when it comes to dealing with a shadow economy, and this is also an example that you may find in our report, is that its effectiveness may be limited. Why is it so? For example, if you provide an incentive of, say, 1% of transaction value. Let's imagine, just for illustration. The question is whether a merchant that on purpose does not report some transactions will be willing to change their behavior because of 1% tax incentive. In fact, we doubt this would be the case, because the benefits of not reporting the transactions are much higher than 1% of transaction value. So what we believe is that it would mostly affect the behavior of merchants that already registered cash payments, that they would replace them with electronic payments. However, if you increase the popularity and you improve the infrastructure of POS terminals through such an incentive, it means that customers would have more options to pay electronically. At the same time, wider infrastructure would also improve the competitiveness of some merchants against those that do not have POS terminals. So this is the measure that directly does not affect passive shadow economy in our view, at least to a limited extent, but it promotes development of infrastructure. However, where this development achieves a given stage, the government normally would withdraw from such incentives to merchants because the infrastructure would already be well established. So I believe, much more powerful regulation would be related to customers' incentives or other obligations or incentives to promote infrastructure development. But again, this is also a very important point I didn't mention in my presentation, that in terms of costs to be incurred by the government, it should be remembered that they may often be temporary, because the government may support a given measure regulation, maybe incur some costs, but at the same time, after, say, a year or two, this incentive may be reduced or even fully eliminated. But if up to this point, people have changed their habits and they have understood the benefits of electronic payments, it is very unlikely that they would shift back to cash usage if there is no more incentive. Maybe a small share of them, yes. But in fact, if you achieve the change in the habits of people, I would rather doubt that they would revert back to cash payments. So it means that also the net impact of a given regulation on government revenues over time would even increase, because you could eliminate the costs completely while the benefits would remain permanently.
Okay. We have another question. What would be the recommendation which measure in case where legal entities offer even higher prices in case of electronical payments?
Can you refer me to the question? Sorry, because I didn't catch it.
What would be the recommendation which measure in the case where legal entities offer even higher prices in the case of electronic payments? To make it more clear, banks ask provisions from legal entities in case of electronic payments. For example, when a buyer wants to pay in cash, there is one
yeah, we understand, yeah.
Process, yeah?
Yeah, so, what I can say is that we observe less and less, fortunately, the situations where the merchants are requesting so-called a surcharge on the consumer when the payment is done in an electronic manner. Now, the surcharge is, at least in the European Union, or the EEA countries, this has been managed via the MIF regulation. So on the certain products that are regulated in the European Commission regulation, the surcharge is not allowed. Now, the surcharging has a very specific approach from the MasterCard perspective, where we simply allow surcharge, but only in limited cases, and performed in terms of the amount in a very specific way. Okay, so there are some guidelines and regulations coming from the MasterCard perspective how this should be done, and this is something that we execute via the acquiring agents to the merchants. Though we understand that there are some situations where merchants ask, simply saying, too high surcharge to the consumers, which might be limiting the electronic payments area. Now, of course, we could think what governments could do in that respect, and that could be a part of one of the regulatory initiatives from the government, saying that this is not allowed in a country A, B, or C, or a merchant groups or sectors B, C, D. This is one of the things that could be done. The second is simply promotion and the more of the electronic payments in given merchant that would build a scale in that merchant of the electronic payments, which would reduce the cost linked to the card acceptance. This is the other option, which is not then regulatory, but more a behavioral approach to an educational approach to the consumers.
Okay. We have a question from one of your previous slides. We noticed the slide, Bulgaria and Croatia had recent receipt lotteries ending in 2016. What impact did the receipt lotteries have in Bulgaria and Croatia? When will they be reintroduced in Bulgaria?
So first of all, receipt lottery in Bulgaria is to be reintroduced this year. And as for their efficiency, well, we try to approach this issue. However, due to, I would say, technical issues like too short time series and too small number of observations for this particular measure, we were not able to calculate it. So I would say there were some objective obstacles that did not allow us to calculate their impact. However, maybe not soon or now it would be possible, but at the time when we conducted the report, we were not able to capture its impact efficiently, again due to technical issues. But in general, at least, I cannot comment on their actual impact on shadow economy contraction. But in general, especially at the initial stage of lotteries, their effects seem to be quite powerful in terms of public perception and public involvement. And one example that I provided was for Serbia, where actually the outturn was as big as 8 million envelopes. And importantly, it did not only require fiscal receipts, but POS slips also worked. So in my view, but it's again my expert's opinion, it's good to have a lottery that is repeated every so often, but maybe not, to be kept continuously. Because if you continue the lottery month by month, what we observed, and it was the case in Slovakia, that after the surge of participants initially, then it went down, but then what we observed was an increase in terms of, call it receipt collectors. So a smaller number of people, but submitted huge number of receipts. But again, what I believe is more efficient, but again, that would be also country specific, is to initiate the lottery, maybe then you can stop for a while and reinitiate it again. And from time to time, focus on a given sector, because I like the solution that you increase the price, the potential price, for winners, these potential winners submitting receipts issued by specific sectors where you expect shadow economy to expand or be higher than in other sectors. So I don't know whether I addressed your question efficiently, But again, I see also there is one question we missed. I don't know whether you would like me to refer to, it was related to tax incentives through VAT deduction work. There was a question on the top.
We're getting quite a few requests for...
Sorry, okay, I'll pass it to you. Okay.
Well, no, I'm sorry. I've just noticed we're getting a lot of requests for your presentation to be shared, and we just wanted to reassure everyone that the presentation will be sent around once the webinar has finished. Food, beverages and tobacco are major sectors of the passive economy. Are there any specific initiatives that have been introduced in this area, i.e. specifically targeting shadow economy in this sector?
As for tobacco sector, I'm afraid it's very often committed shadow economy because in the illicit market for tobacco products, consumers can buy those products at often half the price or even at a lower percentage of the original legal products. And they are often aware that they purchase products from illegal sources. So the question is whether it is indeed the passive shadow economy. And I'm afraid that in this case, consumers would not be able to pay electronically in any way because the seller is actually working in unregistered economy. So this is not this passive shadow economy that we address here. So such sectors like tobacco, drugs, or maybe other illegal products like exotic animals also, those are sectors that require other measures to address, especially in the case of tobacco that should be execution and control measures, but also taxation policy, because the price difference related to taxation of tobacco products matters a lot.
But here I think that we can widen a little bit this question, because tobacco industry is of course very much different than or can be very much different than anything else, but it also flies in under the B2B trade, and the B2B trade is also something that government in Central Eastern Europe has on the target to limit the cash being used in the payments between the businesses. And the practical examples of what the government did is that in most of the markets in Central Eastern Europe, cash limits for the B2B transactions were significantly lowered from, let's say, 5,000 euro to 2,000 euro or 1,000 euro, 1,500 euro. And on the top of that, for example, Polish government added a clause which says that if the transaction will be above the limit and will be performed in cash, the buyer is unable, he cannot recognize that transaction as a cost of running the business. So it's not only to put the limit, it's also to put some kind of a sanction, what will happen if still cash will be used. So this is a little bit maybe off the topic, but in my opinion also related, what is happening on the B2B space.
Yeah, and this example is provided on page 25 of the presentation.
Okay, we have another question. What is the benefit to government's financing 100% of the cost of installing new point-of-sale terminals?
So maybe I will start first. And so the results of the regulation on POS terminals that I presented, I come back to this, so you can see it here. on the right-hand side, you see the impact of this regulation on net government revenues here, net government revenues. So that means that we do not look only at the benefits that government obtains from contraction of the shadow economy, but we reduce those benefits by the costs related to the purchase of POS terminals. Yet to be clear, it is not that we suggest that it has to be the government to finance POS terminals, because we consider both options, and we present the findings in the report for government revenues, including or excluding costs related to the purchase of POS terminals. So, but here what we find that while in Bulgaria the impact would be quite limited in terms of government revenues, in the case of Czech Republic, Slovakia, or Poland, those would be still pretty high. So what you may observe is that this regulation, through promotion of payment acceptance infrastructure, increases the ability of consumers to pay electronically, and in this way it allows them to, it helps in replacing cash payments with electronic payments, and through this channel reducing shadow economy. And if shadow economy is reduced, the tax base is increased, because tax collection from VAT and in particular corporate income tax also increase, because more transactions are reported. At the same time, you can set those benefits against the costs, and this is what we did and what I present on page 19. And obviously, again, my previous comment applies here, that this cost may be a one-off, while those benefits will be permanent. So in the short term, this cost-benefit analysis would indicate the figure that would be lower than in the longer term, because in the longer term, the government may no longer incur the costs related to purchase of POS terminals, but the benefits of more popular electronic payments will be obtained year after year.
And to add on that, what is presented in the report when the government finances the terminals, this is one of the options that could be applied, okay? And you can have multi-variations of that option. One of the practical ones is that in Poland, the government is thinking and working with the stakeholders in the market to create a fund that would be used to co-finance the terminals provided to the merchants. Okay. Now there are discussions with all the stakeholders on the issuing side, acquiring side, payment systems, and others, how to create the fund, how to finance the fund, who would manage and control that, and what would be the rules of getting the subsidies from the fund, where of course the subsidies would be given to the acquiring side, that is in a physical relation with physical or practical relation with the merchant, and that is really hunting for the new merchants to install the terminals. So you could arrive to the same point in terms of the governmental positive influence of reduction of the shadow economy by using different tools that we present in the report, or a variation of the tool that we have there.
Fantastic, thank you. It's more of a technical question. Is there a link between in-country internet coverage and the quality of internet coverage to the ability of merchants to rely on electronic point-of-sale terminals, and is this a barrier to implementation in any way?
Well, of course, internet is very important in when it comes to the terminalization, and on one hand, I could say yes, the better the connection to the internet across the country, the higher probability that acceptance and terminalization could develop in a quicker way. But Nowadays, there are so many ways how you can accept the electronic payments. You don't need internet as a fixed line. You can use the mobile to do it. You can use the mobile data transfers that you have from the mobile operators to operate a payment terminal. So on one hand, this is important. On the other hand, there are many other solutions that nowadays you can use to develop the acceptance network. And as examples, I could give you all the providers of the mobile terminals or MPOSes, for example, iZettle, Square, Ingenicos of our world that have dongles being connected to mobile phone, and all the data connection goes via the data transfers with the mobile operator. So you don't need a fixed line of the internet, you just need a mobile phone, which is much more popular in each and every market than a fixed line of the internet.
Okay, we're drawing to a close. Could I ask the panelists to perhaps sum up, give us their one learning from this topic that they feel that the participants should take away with them? The one thing, if they really want somebody to take away, what would that be? I don't know who would like to start, and then perhaps if Michael, you could sum up for us before we close.
Yeah. So thank you for this surprise question, Kevin. But if I'm to say one thing that we kind of took very seriously is to really understand what is need of the government and what is the challenge that they are struggling with, to make sure that our willingness to cooperate with the government and our engagement into that will be directed in the right way, as simple as that. So for us, a very important lesson was really spending time with the government and discussing with them about what they see and what we see as a challenges, to arrive to a single or limited number of the ideas that we could do together, and then really focus on what we are doing, providing, and this is the second lesson or second learning, providing something that is on the top, that is different, that is more insightful than any other deliverables in that area before, because we were facing the situation where there were other shadow economy reports, there were other academical work being done, and we wanted to make sure that whatever we will provide will be much more practical, much more useful, and much more to the point to our audience, meaning to the governments of the Central Eastern Europe.
Marek speaking. Maybe I'll share, one of my takeaways from this study, my personal one, is that we often think of shadow economy in terms of, big crime groups like in the tobacco industry, fuel industry, drugs, selling arms, and so on. What we often forget about is, say, minor issues, call it in this way. But what came up with this study is that we found out that those small value operations turn out to be quite massive. And if you aggregate them, those small value operations, you arrive at very big figures. So it turns out that apart from those shadow economy areas where you have to apply special measures, execution measures, control measures, special forces, and so on, you can apply entirely different approach here, promotion of electronic payments, that can help reduce the shadow economy, at the same time increase financial inclusiveness and increase government revenue. So this is a big win-win solution dealing with unfair practices conducted by some companies. So you improve competitiveness of fair business, you improve government revenues, at the same time increase financial inclusion. But as stated by you, it often takes also a change in the attitude of consumers and merchants. And this is also the part that has to be conducted by businesses and the government.
Okay, so summing up the webinar, we wanted to present you what we've done and how we are contributing to the work with the government and more transparency in the economy. We hope that what you have heard and saw today is something that at least fired up a spark in your mind that there are some new things that could be done. We are very happy to answer all the questions that were not answered. Either were not answered today, either there still might be in your heads that you haven't asked. I think, Kevin, you will provide to all the participants the presentation plus the contact details to us. We are happy to engage in your markets in the work, share even more deeper what we've done and what is working, what is not working, what are the advantages or successes in the process. But I think more importantly, what are the dead ends or the path that you shouldn't take, because it will lead you to a complicated environment. So if you feel that this is the interesting work and this is something that you would like to utilize in your everyday work or a business, then we are happy to connect to you and run the further discussions.
Fantastic. I'd like to thank MasterCard and EY very much for this great piece of research and insight and some real practical ideas on implementation. Please could I remind everybody presentations will be sent around. We will be writing a report on today's presentations and publishing it on globalgovernmentforum.com. And please can I request that you complete our feedback survey when you have finished today. It should pop up as you log out. Thank you all very much and hope to see you at another seminar soon.